We've been talking about this on the show, on both your shows, Scott, that we've been rotating to quality. And the reason is you have to stay invested. We don't think this bounce is going to be sustained. We think this is a bear market bounce. But one of these rallies will be sustained. And if you just look at what's happened, I was taking a peek through our portfolios, our growth and our dividend portfolios, and you have stocks that are rated very high on the quality scale, H&R Block, AutoZone, Regeneron, that are all up for the year. O'Reilly, which is down less than the market. You have in the dividend names, EOG, Lockheed Martin, AbbVie, all doing really well because they're high quality businesses. Of course, we own some of the others, the Microsofts, the JP Morgans and the like, which have taken some gas. But you have to stay invested through this, and I think investors have to upgrade to quality. I think what you've seen is markets pricing in a greater recession risk over the last 2 weeks, and we still think that is all dependent on what happens with the war and what happens with the lockdowns in China. The lockdown news this morning was good, and markets are so oversold, they're looking for something positive to hang on to. We don't think this is the bottom. We think you have to stay a little more conservative. We think that looks like owning quality and having a little more cash, which is what we're doing for clients.
Okay. So, Bryn, I mentioned this GFR note. On the issue of whether anything is sustainable or not, to Rob's point, even though he doesn't think it is, they suggest that you need to watch a certain group of stocks to see if it has staying power. Home Depot, Google, Starbucks, Caterpillar, we mentioned Apple, but those kind of stocks are the ones that they're looking for. That makes sense to you?
Yeah, when you think about it, Starbucks is going to be supply chain, commodities, and employees. Home Depot is going to be the consumer. And so I think that's a good roundup of names. I think, though, that people have to understand this is not going, I don't think this is going to be a March 2020 or a fourth quarter 2018 when you bounce off and you quickly move back higher. Because both times, what happened? In 2018, the Fed pivoted, and in 2020, the Fed came in. And so this is just I think, somewhat of a paradigm shift that we may have found a bottom today. We may have found a bottom next week or next month, but it's just going to be it's going to be a slower grind going forward. And so I think investors need to be patient, but I don't think investors need to be pivoting totally out of growth or just ignoring them and just buying old-time free cash flow companies and just saying growth is dead forever.
I'm going to be as dismissive of that note and that comment as you would expect me to be.
Well, I would expect nothing less.
Exactly.
From you. The fact
and
that you're
I
right
beat you
here
to
in
the punch
front
on that.
The fact that you're right here doing it in front of me, I mean, is
right.
just even more perfect.
And I would
Pete,
say,
don't you worry. I got something good for you, Pete, coming up, because I just saw a tweet from somebody, and I cannot wait to bring something up with you. Just a second. That's a tease and a good one. Go ahead.
I'm glad to be here, Scott. I'm not happy to see how the pandemic's aged you, but maybe that's dealing with me that's done that. But here's what I'd say.
You should be so lucky.
Caterpillar has been irrelevant in terms of the overall market for an extended period of time, as has Starbucks. While the market's gone up dramatically up until this point, those stocks have been basically nothing. Caterpillar did have a run at the end of last year and with the commodities, but I'm a little, I guess, exhausted from so many people coming out trying to find tea leaves and read those that don't exist. And this falls into that category. They're losing sight of the bigger picture, which are declining estimates, which are China, which is still back on its heels, with the potential China-Taiwan conflict, with Russia, with Ukraine, with energy being cut back and no ability to cut back on energy pricing. So, read me another one tomorrow about somebody else find something else that's meaningless. It'll make my day.
But, I mean, this is not necessarily meaningless. If you can get some sort of holdup in the stocks that matter the most.
They don't matter the most, my point. So they're trying to say
Apple matters. Apple might matter the most.
Apple matters a little, but we went through periods of time. A little?
Apple matters a little?
It matters a little, exactly.
It matters a lot. Why doesn't it matter a lot?
Because we went through.
Why do we need to have this argument?
Because we went through extended periods in the market where FANG did not participate. Pete can laugh all he wants. Hopefully, he finds something funny his brother's saying too. But it's just not factual.
I will say though, on those companies, it is a lens into different factors inside the global economy. And so I think for that reason, understanding the consumer with Home Depot, understanding commodity and wage inflation with Starbucks, I do think it's something of note. I agree with Steve, but I wouldn't say to dismiss it because it definitely gives you insights into what's happening into the economy, up and down the supply chain and up and down labor market.